What's going on, guys? I want to make a video talking about a bullish and a bearish case of where we are in the markets. I want to keep an open mind, not want to be tending towards bullish or bearish at this point of time. By the way, if you guys like the video, please do like and subscribe. Going to make me more motivated to make more video for you guys. Okay, so let's look at it. We are looking at the spiders out here, right? What we're seeing on here, the red ones are the long-term moving averages, the green ones are the short-term moving averages. My concern to remain long bias are the red ones, right? These are the long-term moving averages, so means as long as they don't turn over, chances are you want to stay on the long side, right? So a couple of things we are looking at. Let's review on the, so let's take a look over here, right? Draw some tools, right? So if you look at based on price, right? A couple of things you're looking at. If you try to base it on price, I mean, after this move, right? After the sub move, you're now coming back. This area which was acting as resistance is now we broke through on it back in January 23rd, and now we are breaking back under this region. So now this region is kind of a key region for which we'll be looking at. Right now, this resistance turns support. Now chances are going to turn resistance again. Now, in terms of the bullish case, right? So in terms of bullish case, remove all of this. What we would like to see is this to hold somewhere around this region and maybe start trending after. Uh, the bearish case for this one, right? If you want to take something similar to see what happened in 2008 and 9, right? This is a bearish case that it can potentially form into, right? So what we're looking at over here, stocks breaking down under, which means now all the long-term buyers are now getting confused what to do, right? So the long-term buyers are now bearish, and now when it comes back towards the moving averages, it's a short opportunity, comes back down, make this move, comes back up, and then you have a short opportunity, right? So bias is not strongly short at this point of time. If you look at the what happened in 2008 and 9 scenario, right? This is what happened, right? If we throw it out on a bigger picture. So if you want to make a bearish case, you want to see something like this. Short-term moving averages under the long-term moving averages, number one, and when the price does come back, it rejects and then has a flush, comes back, rejects, and then has a nice flush down. Right, so this is a bearish case scenario that can potentially happen. If you take a look on the weekly, we still morphing into a longer term bearish move. Right now, this is not bullish at all, right? For this to turn to bullish, something really constructive has to happen, but I don't see that happening at this present point. What I'm really looking forward to, if it turns into something more bearish in nature, something like this, right? If it's for something like this, short term below the long term, try to rebound, didn't go, came back down, rebound, and then you have a big flush, right? So this is a weekly chart. If you want to look on the monthly chart, we are still long and strong, right? I mean, on the monthly chart, if you take a look at it, last time when it broke through the sideways action was somewhere around this 219, 220 level. So this is still a long way to go, right? I mean, we are up from 220 all the way to 300, so that's about 80 points on 220. So that's quite a bit, so about 40% move from bottom to up. Right now, what we're trying to look at is some kind of a pullback, right? Is pretty much what we can see on here. I don't really see a bit crashing, right? I mean, worst comes to worst, comes down to 220. There's still a lot of pending buying on here. So on the monthly front, still looks pretty bullish at present. On the weekly front, it's kind of a bit of a situation where there's for it to really go back up. I mean, it has all of these people to fight for, right? So it's going to be a tough one. Now, if you want to take it day by day, right? So if you want to take a look on the daily chart, on the daily we are under, right? So daily is going to give you a lot of mixed signals, to be honest. But when you look on the daily chart, we are under, and now chances if you want to make a bearish bet on it, it would be viable, right? Let me look on the charts. Trades. So that's that, and let me see in terms of the diamonds, which is Dow Jones. Same theory on here, right? So I still feel like, you know what, there's still going to be a lot of volatility in there, but I don't really see a big major flush going on. So probably a lot of something like this trying to morph down here, right? So eventually it breaks. The only way I'm really going to be bullish at this point of time, if you look, say, go back to the spiders, if we can maybe somewhere come close to 290 and trying to form a bullish pattern, then it goes, right? But at this point of time, chances are going into the end of the year, I don't see any bullish pattern being set up, and all these people who have been buying up here from 280 to 300, I mean, these all people are going to act like resistance, right? So it's going to take quite a bit of time for a bit more constructive phase, but at this present point, the bias is neutral. It's not bullish, it's not bearish on the weekly front, which is the front I really take a look at. On the daily front, yes, you can say on the daily front, we are under the long-term moving averages on the daily front. So as long as we stay under this 280 level, you know what, having a bearish case would clearly make sense. Right now, how far it can flush into, if it won't start flushing, it can start flushing pretty fast, right? So main regions that we will be that I'll be looking at, right, this is going to be this 260 level, right? 260 level is going to be a region of interest on here throughout the 20-year weekly, and that's where we were down here. So this is a viable zone somewhere around the 260 level, right? From 300 down to 60. So what are we looking at? So it's a decent move, right? So nice pullback for everybody who gets flushed out. So right now the bias is neutral. If it does have something that's similar like the 2009, then I'll have a more bearish approach. But if you want to do day trading, right? If you want to trade volatility, you can definitely take a look at the UVXY, which is one name that you can take a look at. Right. So if you want to trade UVXY on the short term, I'm looking at this daily chart on here. So UVXY, if you want to trade volatility, this is a ProShares Ultra Short ETF. What you want to see on here is something which is really good. And up, move up, 36 to 60 bucks. Now is coming down, is finding support. If it breaks somewhere around 56, we can see a quick spike again, right? So if you want to trade calls, that's one way to do it. If you want to take a look on the weekly time frame, let's try to see. You don't really see anything weekly over here because of the moving averages, right? Let me open up another flexible grid. Right, so let's look at the UVXY. So there's still uncertainty, right? So you want to trade volatility index if possible. So UVXY is one way to do it. So the region of interest at this present time would be somewhere around this $56 region. If you can break this level, you know what, there's a lot of chance that it can get spiking, right? If you wanted to look on the trades, so we can try to see the option trades for UVXY, see what's going on. So let's say we look at the November the 9th weeklies, right? Bid, volume, open interest. So looking at November 9th, don't really see anything too crazy out here. You know what, I do see this volume sitting over here of 55, right? On November 9th, 4,800 calls being sitting over here. Let's see if there's anything else. November 2nd. Strikes. This is 220 over 100. So don't see much sitting on here on the UVXY though. On the option side, don't have to see a lot of volume, or there's a lot of open interest though, right? 909. So yeah, I mean, if you look on the option side, then if you look at the November 9th, you know what, it does look like there was a lot of volume being traded today, right? Because volume, this is volume today, this is open interest, which was there before. So a lot of people have taken positions in here on the call side, so they are expecting a lot of volatility. This is November 9th, so we are about 2-3 weeks out. Right, so if you look at spiders, let's see if there's anything that we see in spiders. Let's see. Volume, so I'm just trying to see if there's anything unusual that stands out. November 9, November 2nd. So on November 2nd, I see a lot of 7,300 puts sitting out here, right? So that is something which was traded today. That's quite a bit, right, as compared to, so a lot of bullish activity, sorry, a lot of bearish trades being set up. Let's see if we go anywhere closer to October 31st. October 31st, same thing, a lot of bearish activity going on over here. Right, so it looks like there is going to be some kind of volatility. So something, if you want to trade volatility, this is one way to trade it using the UVXY. Something that I will be watching next for the coming days, right? I mean, after I see this nice bullish activity, which got open today, would pique my interest on here, right? Try to pull up the chart. More info. Send. Right, so that's what we are seeing. Okay, so that's pretty much it, guys. So bias right now is neutral, as I mentioned. Bias is neutral on the spiders, on the overall market. Just try to pull this thing back up. So bias is neutral. However, because we are under the on the daily front, we are under the long-term moving averages on the daily front. Volatility is expected. So one way that I will be looking to trade would be the UVXY. Would be a great one to trade. If it goes over 55, 56, you know what, then it can start getting spiking out here. If you do like the videos, please like and subscribe. Keeps me motivated to make more video for you guys. Have a good one.